So this week, the stock market fell quite a lot, quite dramatically and really fast. It's actually been really interesting to watch it all unfold. So I thought I would make a video just discussing what you should do right now if you're worried, or how you can take advantage of the situation. One thing we won't be mentioning in this video is the C word, simply because YouTube is demonetizing any videos that have that word in the title or in the tags or in the video. And that's not what this video is about anyway. It's about panic selling and people's reactions to things that aren't even business related or economic related, but a health crisis. Now you can argue, of course, that in the future there possibly will be economic and business impacts on this, but right now it's all just speculation. What's happening right now is panic selling. So why did the market fall? Investors are emotional. They're very much fear-based. When things are going well, they buy, and when things are going poorly or they get scared or they're nervous, they'll jump out and take their money out of the stock market. So that's pretty much what you're seeing right now, is a lot of fear and a lot of panic selling. People aren't making judgments based on economic or business factors or the financial information of a company. They're factoring in, they want to stockpile their money. Pretty much how they're stockpiling water and other things from the supermarket. People want to prepare for the worst. Now, when it comes to anything financial, making fear-based decisions is never in your best interests. You're likely to make very unwise decisions. When you're making decisions, especially financial ones, you really need to keep all emotion out of it and think logically about how you're going to move your money and what you're going to do with it. So let's look at this whole situation logically and try and make a decision on what we're going to do in this current situation. So what should you be doing? First off, the most important thing is don't panic sell. You will lose money in the stock market if you sell at a lower price than you paid for it. So if you're selling at a low price, then you're going to lose money. But keeping your money in there doesn't mean you've lost anything. It just means that the value of the stock market is down right now. Maybe consider buying. Right now, there are some great companies and their prices have just fallen. It's a stock market sale. So Warren Buffett has this great quote that I always like to remember in times like this. We simply attempt to be fearful when others are greedy, and to be greedy only when others are fearful. Warren Buffett. It's good to note that dividends are still going to be paid even through this period. Dividends are not dependent on stock price. They're dependent on how much of the stock that you hold. So that the more stock that you hold, the higher your dividend payments are going to be over the long term. And when the price is low, you can buy more stock. And of course, just wait it out. The market is going to recover. But how long will it take the market to recover after this, after such a dramatic fall? So no one knows exactly how long it's going to last, pretty much because we don't know how long the health crisis is going to last, how severe it's going to be. I mean, there's a lot of fear-based news reports about it right now, but we don't know the long-term severity of it right now. And so we can only look at past different health impacts and how they have impacted the market, and have a look at those to see how this might impact the market going forward. So Traders Market had a great article on this just recently, and I'm going to show you some of the highlights of that right now. I'll also link their article down in the description below if you want to read more. It was a great article looking at the various other health impacts that have had on the market and how long the market has recovered after the stock market has gone down during those periods. These are all for the S&P 500, but there were similar falls and dips in the Australian market and in other share markets as well. The colour red on the graph represents the period prior to the peak of the epidemic, and the green represents the period after it was beginning to resolve. So the crossover between the red and green lines is the peak of the epidemic. So Ebola took about a month to recover. SARS dropped about 10% over 3 months. It started rising again even before the peak, and it took 5 months before it was back to the levels it was before it started dropping. Swine flu dropped 5.5% right after the peak, but then recovered within a month. So if you are going to take advantage of the price falls, what should you buy? Pretty much any blue chip is a safe bet right now. If you don't know particularly what company you want to buy, index funds are a great option right now. Dividend stocks are great because you'll be able to get more of the stock, so your dividend payments are going to be higher, you'll get more money later on. And maybe you even want to, if you want to be a little bit more riskier, have a look at some of the pharmaceutical or health companies that might be creating things that would help this health crisis. That might be a good bet short term. But you never know, that one is a little bit more riskier. Blue chips and the rest, great options. And lastly, just ignore the market right now. It's super crazy, and if you don't have a logical mind, it can feel a bit scary. This is going to pass too. It always has. I don't know how long it's going to be, but just look at it really analytically and just watch people's behavior. That's always a great education. As always, thank you so much for watching this video. I hope you found this helpful, and I'll see you next time I film. Bye.